All right, how I made $20,030 with one account, prop firm trading. I'm just going to share on this account what has worked for me in the past 4 years of trading, how to leverage prop firms, all that good shit. It's not going to be like fucking glitz and glam. I'm not going to lie. It's going to be, if you have the attention span of a walnut, you probably aren't going to like this video. But that is a cool number. So we're going to go over the emotional ups and downs of specifically this account, because this account is one of those accounts that I think is a great learning opportunity for people that keep failing accounts, because this account was in a ton of drawdown. It was very streaky, and I think it's just a great account to review. And I ended up getting a payout on it. So we're going to go over that, and then I'm going to go over my strategy. It's pretty simple, but I'm going to run through that. And yeah. All right. First thing I want to get into here is understanding the rules of whatever prop firm you're using. Now, this is something that I think is overlooked. I'm going to pull this up actually right here. Now, every single prop firm page has an FAQ with your account that you're buying. I like two-step accounts because they provide longevity. I feel like one steps are lazy. So the point I'm getting at here is you want to read this thoroughly, and this is just kind of a disclaimer. Like I've probably read this page 150 times, but I've had people that I either teach or they ask me for advice. They don't read this. They don't understand the rules. They either get a funded account and don't understand what a consistency rule is, or there's just another bullshit rule in here from the prop firm that is made for you to fail, right? That's why you want to stick with the good ones. I think there's about 3 or 4 good ones right now. But you got to think at the end of the day, these people are the house. Like you're trading the markets, which has a house edge, like gambling. When you prop firm trade, you're also trading against the house. So that is something to take into consideration. Okay, this is relevant because I want people to understand. And when we look at the graph of the actual account, you'll see that I was on a super hot streak with the evaluations. I took about 6 trades, won all 6, which is about 2 weeks of trading for me because my strategy allows me to trade once or twice a week. So that is something to note. Super hot streak, and that's important to understand for your emotional triggers when getting into the actual funded stage of an account. Okay, so this is the actual account chart. Looks just like a line chart on, a pair or a stock, but it represents my account. This is the funded stage, like I said, super hot streak, and that is important because I understand right here on my account open that there's probably a loss streak coming. That's just how trading works. It's how trading has worked for me throughout these years. Like every single time I'm on a super hot streak, I don't always go on a losing streak, but I always lose. It's coming. Like you don't just win forever. That's just not how this works. So understanding that, I'm at 200K on the account, break even right here. Take a win, continue the hot streak, take a little bit of a loss, and then I would still consider this right here. Oh, it is not colored. There we go. This is still my hot streak, actually, like this. So that's still my hot streak, right? I'm still winning, little dip, but I would consider that the hot streak. Now, I am prepping for a loss, right? So right here, I size down. I get sometimes, and this is probably something you're not going to hear very often. You're going to hear, oh, always consistent size. I can sometimes tell when I'm going to lose, even if the setup is A plus plus. And this, I'm telling you right now, people aren't going to admit this, but sometimes I can tell, and I size down right here. Size down on these 3 trades. This might not be 3 trades because if you can see here and like here, These are spread tests, meaning like I'm testing the market. So these some of these aren't actual trades. But right here, I'm sizing down, losing streaks coming. I get a win, and losing streak, right? Right here, what I'm thinking is I need to just stay level headed. It's easier said than done, but I need to stay level headed and get my sizing back, because right around here, I'm like, okay, I can get my sizing back. I've lost a couple. Let me size back into a couple trades that I'm confident in. And that's not saying I'm not confident in these trades. It's just saying that I understand that I'm going to get my sizing back and the chart should look something like this. Okay, what happens right here? I didn't say it, but it's on the chart. Forgot about it. I was at a party because my strategy allows me to trade and then forget about it and then come back, right? So I can fully extrapolate my emotions out of my trading. Right here, sizing normal, sizing the same as these. I caught a news piece. I didn't check news, which is a mistake. I didn't check news, and I forgot about it fully. Hit my stop loss. Slippage occurred. Yeah, that's something that you got to deal with trading in general, but specifically prop firms. So right here, I took a $9,500 loss. I'm $500 away from my drawdown. I'm kind of fucked, right? And then I keep losing. I sized down here, or I was sizing down all three of these actually. This should say higher size. I don't know why it says lower size. But then I'm sizing to 0.5% right here. I catch a $6,000 win. I caught a 6-1, and I'll actually show that trade towards the end. But I caught a $6,000 win, and then higher size, boom, 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 boom. We start going up again. So that it's kind of hard for me to explain every emotion that I was feeling in that drawdown. But the key takeaways are lower your size and extrapolate your timeline for when you actually need to be profitable and start winning again. Because this is a 3-month chart. This took 3 months to, this whole thing is 3 months. All right, next part I want to get into is understanding why a lot of people get into drawdown in the first place. It's very, very common. But there's some key takeaways that you can learn from this account and just me in general to understand why this keeps happening to you maybe and how to fix it. The number one thing that I did is that held me back for a while are these two things right here. Changing my strategy to get quick profits. Now, a lot of people are under this impression that changing a strategy to either become a day trader or just change your strategy in general is going to provide a different result, which it couldn't be farther from the truth. That is a very large misconception that if you break it down fundamentally, it doesn't really make sense at all. Because when you expand your timeline, every strategy works. You just need to be in the right headspace to trade said strategy. I like swing trading. That's what I showed you on that chart. That was a swing trading account. All my accounts are swing trading. But don't change your strategy just because you're unprofitable. I would say 95% of the time, it's you, not your strategy. Which leads me to the next thing is sitting in front of your computer for too long. Get a hobby, build a business. Don't sit in front of a computer, especially if you have gambling tendencies and you are somebody that is struggling with quick profits, which a lot of people do. Get outside and don't sit in front of your computer because you're just going to want to press that buy button. Over leveraging, pretty common. Just don't do it. If anything, under leverage. And then this last one is maybe you are just in a losing streak. A lot of people can't wrap their head around that. It's like, oh, why am I losing money? I think I have it below this, which down here. Treat it like a business. Treat trading like a business. When you take a loss, treat it like it is an expense in the business that you just had to pay for, and it's more efficient. All right, moving down, extra source of income. That's something that helped me a lot. Purposely wait for your setups longer. I'm telling you, I take an extra 5, 6, 7 hours, 6, 7, to take my setups. And that is something that changed my trading, is just waiting hours and hours longer to take setups. Last is don't take I think setups. Realize where you're at on the chessboard, and this pretty much ties back into don't over leverage and then expand your timeline, which we already talked about. All right, now I want to talk about my strategy because I think that's what most people are probably wondering. Because it's like, that's what I said. People want to. All right, I'm going to talk about my strategy now. It's something that people want to hear because, I don't know, it gives people a dopamine rush of, oh, a new strategy, like maybe I can use it. Same thing we talk about with don't change your strategy for the person. Find what works for you, please. That would have saved me years off literally my life. But this is just what has worked for me. It's really simple. If you guys know Alex, huge trader, but I found him when he was like 10K subs. And I use all of his free resources. And I found this like 3 years ago. It's the only strategy that has made me profitable. And it's very similar, what I'm going to talk about here, to how he trades. So the first thing is understanding market structure / playing with the trend. This will save you so much money for the sole fact of your win rate is going to be so much higher. Even if your trading style doesn't require a huge win rate, which this one doesn't, playing with the trend is going to save you a ton of money. No matter, I don't care what strategy you're trading, that's just how markets move. When you are trying to catch a bottom, you are more or less gambling. I mean, not really, but for some reason, our brains think that catching the bottom and riding something up, let's say, catching the top and riding something down fully is more money when you could just have good RR and play with the trend. Next thing is identifying key psych levels. It's pretty self-explanatory. I think if you know anything about trading, 15, 30-minute order block. I'm going to show examples of what I actually took on this account. 15, 30-minute order blocks up to 4-hour sentiment, and then a breaker structure. All right. I think I'm back, but that I just checked the last bit of that recording. The whole thing got fucked up. So, or the chart part, I should say. Now I'm on the actual charts. I'm going to go over some of the trades that I took in the actual evaluation and funded account. I'm actually only going to show the funded account, 2 of them, because I think they fit what I was talking about. They fit the pillars that I left off on. So first pillar is understanding market structure. And this is kind of, well, what I start at normally is looking at the daily and the weekly on a macro time frame to see where we're at. And this is a little tricky for the sole fact that this was taken a while ago, this trade. But we look at the daily, look at the weekly, you get a bias, you create your bias off of that, and you play with the trend. So once I see that, and I kind of just do that on a scan, I will go down through this entire list, add what I need to. I don't trade gold. I don't know why that's up there, but it's always been there. And I will understand market structure based off of that. Once I'm on the 4-hour, I will dig a little bit deeper. This is a little messed up, but we see that we are in a bearish downtrend with higher highs, and then we get to this area, which is where I was at like 2 weeks before taking this trade. So 2 weeks before, what we have to understand is I'm in that winning season, right? I keep winning, I'm winning, and I see I see this good setup, and I'm like, okay, I'm going to try to execute on this when the time comes. So I see this double bottom, I see this area of demand be turned into supply. So what we have here is a double bottom break, and now we have this, which is the start of a head and shoulders pattern. Now, you don't know that at the time. I just see, okay, it pushed back into this area of interest, created a supply zone. Once we create that supply zone and then we break through it and sweep with this nice looking candle, that's when I'm interested. So this is Friday. This is the end of the week. Obviously, markets close on the weekends. And I'm like, okay, next week I am looking for a push and a confirmation on the 4-hour and all my time frames back into this supply zone, because then we would create I was going to draw it, but you can visualize it. The left head, or the left shoulder, the head, and the right shoulder, right? Off of that, how do I execute? I will scale down to, God, this is really annoying how it keeps taking me back. I'll scale down to the hourly, and on the hourly, I will look, I'll do the hourly or 30-minute based off of how tight of a range we're trading in. This one, I think I was looking on the hourly. Once we get this sweep of this structure point right here, I'm not really interested in this because markets closed here and then we get volume dried out because there's nothing in session. Once we get this to confirm, and I also use volume for candle anomalies. I know a lot of people in Forex don't really use that, but I like to. It gives me a little bit more confirmation for whatever I'm trading. And it kind of just depends on how the candles are moving. But I look for anomalies. I like the sweep. We got the 30-minute in the hourly order block, along with break structure. How I decipher my stop loss is I put my stop right above the left shoulder entry here, and I put my take profit down here, and as we can see, it tapped it, and I kind of got lucky with the spread being in my favor. So yeah, that is a nice 4-2-1 trade, and I think I mentioned that this is the trade that got me out of that big drawdown after being at a party and being a fucking idiot. So that. All right, second, I guess you could say, example that I think shows or showcases principles that I'm trying to teach in this video is ADJPY. Now, this is probably a harder trade to identify because there isn't a clear direction of trend, and sometimes when you are first starting out, trying to decipher trend can be contradicting based off of what time frames that you are looking at. So first thing we're going to want to do is look at market structure, and this is why it's a little harder because we are in a tighter range. I do like, I always like sweeps. I always look for sweeps. Like when I look left or I'm looking at real-time price, I always like sweeps no matter what. I think you can higher your win rate if you can be a profitable trader by just trading sweeps. I use that as confluence along with all my other things that I talked about in that graph. But market structure here is we have obviously bearish. I mean, it's actually not too obvious, but we're trading within this range, and we're also creating another head and shoulders pattern right here. There's the head, right shoulder. It's a little wonkier, but that's what it is at the end of the day. Once we decipher these two areas, I'm like, okay, I am not going to trade unless I get a break of one of these ranges, which is a pretty easy way to trade. Like I said, you want to keep it as simple as possible. So I have my two ranges. Once I see this, and this is at, what time is this? I hate. This is at like the night, right? Sometimes I'll take a trade before London session, like midnight. I think like 9 to 11, and then you'll have a gap between from like 11 to like 3, which is when London session starts here in Miami. Um, that is when I'll take trades sometimes. So I think I took this. This is one of those that I took just because I like confirmation. We closed below it. This was an anomaly, but I thought that, okay, we have it's like a spring. We have so much like compressed price right here that I was like, this is gonna move without me. So I'm either in or I'm out. So we close below it, we break below it. I got in on this retest, and I was just trying to, I didn't think it would go this far down. I was honestly just trying to catch like a 2 to 1. Like I was trying to catch something like this. This is where I had my risk based off of this wick. It was actually probably a little bit higher, like here. And I don't really set take profits normally, but going back to that graph and the principles that we trade off of, what do we have here? We have a psych level. I use psych levels as my risk. I also use psych levels as my take profit and just a general catalyst to whatever trade that I'm taking. And also something to mention is it doesn't need to have all four of those pillars. It could have at least two. I genuinely or generally only traded with two of them in play there. So that's what we have. I mean, it's pretty simple. It's a break and retest strategy based off of price. I used to be a price action trader, like super heavy on volume. So I will use just candlestick patterns and just what candles are looking like for forex markets. I have found that they work, but I just ultimately have found that if you just trade simply break and retests, you trade breakthroughs of ranges like this, and like I just showed you, play with market structure. Most of the time, over a longer, or I should say, over a long period of time, your trading is going to be consistent, and you're going to see that your RR is the only thing that matters, and catching these trades is going to become a lot easier.